Good morning. Mike Vacchi, Princeton Trader for nakedtrader.com, here with the Wednesday pre-market webcast. Well, yesterday was a trend down day. Any way you slice it, we were down. The passage of the actual debt ceiling bill was definitely a sell the news event at every turn. We had those 20 handles up Sunday night when they originally cut the deal. We peaked just about at the time the president took the podium at Sunday night, and we've been down ever since. So down 8 days in a row at this point. The low in the pre-market right now is 1244.25. We are trading 10 handles up off of that, 1254.25. At the lows, we are 30 points below the 200-day moving average, which is a ways. The key level for me right now is the 200, and we'll explain why here in a minute. But I just wanted to give you some very key levels as we go into today. Like I said, 10 handle relief rally. The daily pivot, my daily pivot, 1258.91, has been containing the upside this morning. So that's your first level. If we get above 1259, then we can start looking to see if a pop over that level becomes support on a retest, and maybe we can do something a little higher from there. But right now, your first resistance level from the current trade is 1259, right at the daily pivot. Now, 200-day moving average sitting 1274. My number one question right now for this market, the one question that leads into all of my other analysis, is going forward in the next week or two, is the 200-day moving average going to be resistance now? If that is the case, then we've got a different kind of market. A market that wants to live below the 200-day moving average is a sell rallies market. It's a market that you want to get short on rallies. So your perception of buy the dip has got to change from buy to dip to sell rallies, get short on rallies, if this market demonstrates in the next week or 2 weeks that it wants to live below the 200-day moving average up at 1274. I fully expect some type of a rally, whether it's a bolt higher or a grind higher, to get us back up to that 200-day moving average, where we either move through or we fail there, and that will define us for late summer and perhaps the fall as well. So let me give you some support and resistance levels. On the upside, 1259. Beyond that, we get the 3-day pivot and a 23% fib retracement from 1347 to this current 1244 low. That comes into play 1267, 1268. So beyond 59, you've got to look at 67, 68 as your next resistance level. Then beyond that is the 200-day moving average, which today on my chart is 1274.21. I use an exponential 200-day moving average. As far as support goes, the overnight lows, 44.25. That's your first line in the sand. Beyond that, you've got the March 17 low, 1241.25. If we lose that level, we're probably going to get a push for some sell stops. And a market below there isn't really a market that's going to trade on technicals. At that point, it becomes psychological. And what we need to do is wait for that capitulation moment before 1241.25. And that's the point where you really want to be cautious. Don't anticipate. Wait for the market to show you something if you want to get long. Wait for it to show that long capitulation tail in a moment where you can get long with a stop at that low. That's the best way to trade that if we break 41.25. Have a great day. I'll be back tomorrow morning. Stay small, be careful, and have a good night. Mike Vacchi, Princeton Trader from the Top Step I Am for nakedtrader.com. Have a good one.